Good day, ladies and gentlemen. Please, if you are still struggling with developing a trading model that you can actually use in the forex market, then today is your lucky day. Okay, some of you have learned some different strategies and you're still finding it difficult for one reason or the other. It could be that the strategy you learned is a little bit complex and you find it difficult to apply it. That's one scenario. Or it could be that even after understanding the complex strategy, you actually do not see it play out as often as you would love it to play out on the charts, okay, which leaves you frustrated. Then I tell you today is your lucky day because I'm going to be teaching you a strategy, a trading model that has a combination of simplicity, repeatability, and effectiveness. Okay, so it's simple. You're gonna see it every day. There's no such thing as you coming to the chat and not seeing it. Okay, and you won't be taking too long to actually spot it. All right, so you're gonna see it. It's repeatable. You see it every single day. Once the setup forms, you take your trade, win or lose, you move on to the next trade. Okay, so and it's very, very effective. This has over 80% accuracy, and that's a good number. Okay, and all you just need are two things. Okay, you need two stuff for this particular system. The very first thing you need is bias. I'll teach you everything. Okay, just stick to the video. So this bias, you need bias, and then your entry. Okay, so these are the two things you need, and as I promised you, it's a very, very simple model. So what is the bias about? How are you going to determine your bias, whether market is moving upwards or downwards? Very simple. Once a candle closes above another candle, that's a bullish bias. As simple as that. There is no two ways about it. It doesn't matter where you're looking at the chart from, whether you're in Africa, Asia, America, it does not matter. The same thing applies. Once a candle closes above another candle, you have a bullish bias. Once a candle closes below another candle, you have a bearish bias. Simple. Okay, so bias has been taken care of. Then the entry model. The entry is simply an FVG. If you have a bullish bias, you are entering what's it called on the very first bullish fair value gap you see. Okay, while if you have a bearish bias, you are entering on the very first bearish fair value gap you see. So we're going to put everything together and you see how this plays out. As usual, I'm going to give you examples so you have nothing to worry about. Okay, so you need two time frames for this particular strategy. The first time frame is for your bias, which is your 15 minutes. That's why I told you you're going to see it every time. You can see we're not using big time frames here. 15 minutes is where you get your bias. Then your entry is going to be on the 1 minute. This has over 80% accuracy. So let's move on to the very first example. So right here, I'm gonna start here. Okay, I'm on the 15 minutes time frame right now. Okay, and you can see this bullish candle closed above this bearish candle right here. So I'm starting from the bottom. I'll start from the bottom, then I'll move up. So this bullish candle here closed above this bearish candle, right? So all you just need to do, in case you can't see it clearly, let me mark out the boundary of the bearish candle. Okay, so you can see that the bullish candle closed above the bearish candle. So what bias did that give us? That gives us a bullish bias. So what I will do next is I'll mark out the boundary of this bullish candle. Mark out the boundary with two horizontal lines. Okay, so once that candle closes, just mark out its boundary, then you run to your 1 minute time frame. I need a vertical line so I can know where I stopped. Okay, so I'll know where to stop when I move to the lower time frame. If it's current price action, you don't need any vertical line. You just quickly move to your 1 minute time frame, then you study the price action. Okay, so let me go to the 1 minute time frame. So I've determined my bias on the 15 minutes, and that's a bullish bias. I'm looking to buy. So the very first bullish fair value gap that forms is what I'll be using as my entry, and my entry time frame is 1 minute. That's why I came down to this 1 minute. Okay, so this is where we are. Alright, So all I just need to do is study the price action around this region to see my very first bullish fair value gap. Why bullish fair value gap? My bias is bullish. Okay, so right here I can see my fair value gap forming, my bullish fair value gap. So I'll use this horizontal lines to mark it out. Okay, alright, so stop loss is gonna be a few pips below this fair value gap. Take profit is 1 to 2. So we go for 1 to 2 risk to reward ratio. The reason why this can give you 1 to 4, but I prefer going to 1 to 2. Then if I still want to hold the trade, I can move stop loss to break even, clear out 50% profit, then allow it to run as far as it can run. So it now boils down to trade management, okay? But if you want to get out of the trade very fast, 1 to 2, you will get that 80% of the time, okay? And for your stop loss, like I said, if you piece below this, alright? So let's see what played out. Price came back in there to tap into your fair value gap, respected it perfectly and pushed. So 1 to 2 would have been somewhere here. The 1 to 2 will be somewhere around here. Okay, I don't want to do actual calculations, so it won't waste much time. 1 to 2 will be somewhere around here. At least you can see that the distance here is like you have times 2 of it right here, and price hit our TP. That should even be more than 1 to 2. You can see it kept going up, so it's more than 1 to 2. Very nice trading system. Okay, so I'm going back to my 15-minute time frame. Okay, let me take this away, take all of this away so we don't get confused. Okay, so I've entered my first trade and I've made money. So next thing is to determine bias. Remember, your bias is a candle closing above another candle. Okay, so look at what happened right here. So this is the candle we traded, right? This is the candle we traded. So did it close above this? Let's see. Yes, it closed above it, right? Even though it looks like a bearish candle, actually did it close above it? Let me see. No, I don't think it closed above it. So that's not a bullish bias. So we just want to leave that. Instead, we wait for a fresh close above. Okay. And what do you see playing out? This bullish candle clearly closed above this. So our bias is bullish. So we just mark out the boundary of this candle. Okay. Mark out the boundary of that candle. Alright, so now that we've marked out the boundary of the candle, we run to our 1 minute time frame for our entry. So I need this vertical line so it can help me see where the next candle started. Okay, so I'm running down to my 1 minute time frame. So where's my vertical line? Okay, that's it right here. Okay, so on the 1 minute time frame, this is where the next candle started. Okay, and started playing around. What am I looking for? I'm looking for the first bullish fair value gap, and I can see it right here. If I'm not mistaken, yes, that's it. Okay, so I'm expecting price to tap into this. Where will the stop loss go? A few pips below this level. We're taking our profit at 1 to 2. Let me do a visual 1 to 2. Just look at it and measure out to 1 to 2. I think 1 to 2 should be somewhere around here. If I'm not mistaken, this is even more than 1 to 2. But let's just leave it there as our target, okay? I don't want to do actual measurements. So price is gonna come back and tap into this, and we expect it to put us in profit. Okay, so right here we were tagged in, right? We were tagged in right here, and price pushed to hit our TP right here. Okay, so basically that's just how this goes. Use your 15 minutes to determine your bias. Use your 1 minute to take your entry. Now the idea behind it that made me frame this up like this trading model up like this is because you have 15 candles on the 1 minute makes just one candle on the 15 minutes. So if we are bearish, definitely price should be able to move within those 15 candles to our take profit position. Okay, so you can do this combination 15 minutes and 1 minute. You can experiment with higher time frames also. That's if you're not a scalper. But if you're scalping and you want to make your money fast, 15 minutes and 1 minute combination is lovely. Please, if you're getting any value from this video, subscribe to the channel. That's the only thing you do to encourage me to keep giving you these secrets. Okay, so let's take one more example. Back to 15 minutes. Okay, so from this trade we just took, you can see that the candle clearly closed above this other candle. This candle closed above this candle, so I'll just mark out the boundary of this candle and take my trade, because that candle is telling me that we are still bullish since it closed above the other candle. So a candle closing above a candle is a bullish bias. So I've marked out the boundary of that candle, and I'll run down to my 1 minute time frame. Okay, so here's my vertical line. Where is my vertical? Okay, yeah. So this is where the next candle started, and it was just playing within the range, but that's none of our business. Our bias is bullish. We are interested in searching for a bullish fair value gap. So let me see. Here's our first bullish fair value gap. I've spotted it. It's right here around this area. So let me use those horizontal lines to mark them out. Right here and right here like this. Okay, so where we might want it to go, 1 to 2 should be somewhere around here, if I'm not mistaken. Yeah, should be somewhere around here at least. With the way I'm gauging it, that should give me up to 1 to 2. Okay, so basically waiting for price to tap into the fair value gap, which it did with this. Let me shift the chart. Okay, so your stop loss will be a few pips below this level. Okay, a few pips below it. Okay, so you don't get stopped out prematurely. And let's see, you can see the way price pushed in the upward direction and hit the TP level, which is 1 to 2. Okay, then from there it started coming down to disrespect the fair value gap, but you would have made money in this direction. Okay, let's say you are greedy and you were going for 1 to 3. Definitely, if that's giving you up to 1 to 2 or 1 to 1.5, you're supposed to move your stop loss to break even as a smart trader. Okay, price shouldn't put you in profit like this and still come stop you out. All right, so basically that's what I have for you for now. Remember, my 50% discount for the month of December is still ongoing. So if you would like me to be your mentor and teach you, some deeper secrets, then you can reach out to me in the comments section. I'll leave a link through which you can do that. Alright, so if you're a new viewer, subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.